Good morning, everyone. Today is Monday, January the 7th, and this is the Futures in 5. We're taking a look at markets that continue to hold higher lows. If you remember, I drew these auction vacuum events a couple of weeks ago, and we came down into them, held them, moved up into this auction vacuum, and now the combination of what the SPX market makers have, as well as prior congestion, show up as heavy resistance here. We still have the opportunity for upside, so our pullbacks are going to be buying spaces, but we can see new auction vacuums sitting here and here. Here's the thing. If we can't keep holding up in this space, we are going to see more downside into these lower edges, so you really don't want to hold on to any longs if it starts losing this area around 25, 27. Wait for it to recapture that zone before you get ourselves into any pickles in terms of sitting in the wrong space. Same sort of thing showing up here in the NQ coming in through the auction profile. This is showing very clearly resistance, also showing support. You know, the market makers don't have a ton of motion here for us, so we might have a couple of quiet days ahead. We've got momentum looking very flat. Watch the edges, 64.01, 64.93. That's still a ton of motion for the intraday trader, so you want to look for that above 64.38, 64.40. We could easily get back into these congestion zones before collapsing, looking for sideways motion overall. All right, here's the same sort of thing. The YM has been the weakest of the bunch. See, it's got all of this activity still relatively untouched, but rejecting in the zone. Pullbacks ought to be buy zones, but if we can't quickly recapture this old resistance as new support, our charts are going to fail. This is really straightforward information here, so we've got to pay attention to what the charts are telling us and then move when it is most appropriate to our risk thresholds, and those are going to be different for each of us. Many of us hold on way too long when we shouldn't, and that is something to be very careful about. This one is really moving up and over. My thought is that it's going to have a little bit of trouble between 49.45 and 50, 60, 57. Somewhere around that area, this chart ought to be able to stall out. But if we take a look at motion, higher lows, higher highs, what we have to do is watch it fail to breach this area, break the pressure of support, and then fail it again on an uptick that allows us to take the short. Many of us try to catch these tops and bottoms, which, listen, I've done plenty of that. It just doesn't give you good consistency in terms of hanging on to a trade. And it feels great to catch it, but you don't want one-offs in your trading career. You want consistent motion, and that's going to occur when you allow the formations to tell you that they are weakening. Let's take a look at gold. Gold really did a great job pulling in to this area. I said on Friday to our trading room, hey, listen, you know, if we lose this 1280, we really are going to have to watch out. We noticed that it did lose the area, but here's something to fall back on. If you pull back from above, the areas that look like support, even though they break, the first thing traders are going to try to do is recapture. That's what we've done. Now we're up here in this region. That's a breakout zone. So what it has to do is pop up and pull back and hold the level before you can move forward, because this is a topping formation. Taking the break out here, the first thing you have to think about is, where's my first target? If it gets through that first target, you'll be paid off very nicely as it moves forward. If it doesn't get through that first target, it's very likely to lose your initial support zone and head lower. So you want to be pretty careful with that. Good luck trading today. This has been the Futures in 5.